Hello and welcome to the Portfolio Matters Share Talk review, where we will be reviewing all of the share talks that we've done since we started our Portfolio Matters podcasts in January. Now, it's going to be a quick review of each one, showing the performance over the period from the time they reviewed until now, and with a quick review also of RNS announcements, regulatory news service announcements that may have come out. So before we go into the review, here's Keith with the disclaimer.
Everything you discussed during the Portfolio Matters podcast is for informational purposes only and should not be considered as investment advice. Listeners should be aware that we will be discussing securities that we own or have a financial interest in. Please do your own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. Full disclaimer can be found at the end. Take it away, Richard.
Thank you, Keith. So we'll begin with Rambler Metals, which was the highest performing share of the share talks. So Rambler Metals, the most significant RNS release was today, in fact, where they released their annual results for the period which included the capital reorganisation. The shares were hit quite hard initially, we noticed this morning, down by about 15%, but they have since rallied. But Keith has gone through these in a little bit more detail, and I think he wanted to add some more flavour to these results.
Well, I haven't actually gone back through the Q1 update yet, but my initial reactions are that the H2 daily tonnage, dry tons milled, if you work it out, was actually really disappointing. It was about 625 tons per day. Now, the capacity of the mill is 1,350 tons per day normally, and they'd previously been guiding that they would get back to normal dry tonnage by the end of Q1, and now they're saying September to December. Now, they haven't updated on guidance, but if they are down on dry tons milled, I can't see any way that they won't be down on copper and gold production. So I would be concerned that at some stage during the year, they're going to have to downgrade guidance. Now, this is a turnaround story. You know, second half of last year was obviously when there was a lot of disruption. Toby Bradbury is just coming in. They're trying to get the financing together. And, you know, obviously half the mill was underwater, so the mine was underwater. So it's not terribly surprising they weren't doing terribly well. But I didn't like the way they didn't split out the quarterly daily dry tons milled in the way that they had done previously. We're not stupid. We will work it out. Yeah. So I don't intend to do anything, basically. I think this is a turnaround story. Everything we've talked about previously remains true. If they can turn this around, then these shares remain, even having doubled, up 70% since we first started talking about them, remain very good value. And copper prices going up, you know.
Yeah, hold on in there. Well, thank you for that, Keith. Next one, Saga, was up 37%, another good call by Keith, I'd say. So the most important RNS for Saga was the 7th of April, where they posted profits for the 2020 financial year of 17.1 million on an underlying basis, had strong trading in its insurance business during the year, helped offset a loss of 78.5 million in the travel segment. So the company has pushed resumption of its cruises to later this year, and despite the travel business being suspended, customer demand has remained strong, the company says, adding the bookings for 21-22 and 22-23 combined 154 million in comparison to 128 million at the same point last year, which represents a 20% improvement, which I would say is a pretty positive update. And I suspect that the results from the insurance will be a little bit of a one-off, because all insurance companies have experienced a decline in claims as a result of people driving less. So presumably premiums will adjust themselves downwards in some way because of competitive forces. But notwithstanding that, they've done well to offset the travel losses with insurance gains.
Yeah, I mean, the thing is, Richard, I was very strongly positive when we covered it, but it's now up best part of 40%. And at the same time, the reopening of Europe just seems to get being pushed further and further back. Now, I realize that Saga's losses in the travel business are being offset by profits in the insurance business, but it's still not good, you know. And so I remain positive. There's plenty of upside here, but, you know, the shares are up 40%. I'm less positive than I was.
Comment, Keith. Independent oil and gas up 31.8%. So with them, they on the 18th of March, they issued a first year loss after tax of £19.3 million versus £15 million a year ago. They signed off the Blythe and Southwark platforms as mechanically complete also earlier this month, which is their development of a couple of additional fields. I don't have any strong view. As you can see, we both rated our position on this company as neutral.
Yeah.
Is there anything you'd like to add, Keith?
Well, actually, I would like to add something on this. So we were neutral because I found this very difficult to value, and we are awaiting first gas. But well, last weekend we did a My Worst Trade with Luke Oldfield, and we were talking about his trade in Arian Silver, and I commented that in a lot of these small development plays, it is better to travel than to arrive. And what you noticed about Arian Silver was how the share price shot up when they initially started producing. And we are just getting to the point where independent oil and gas will have their first gas. And frankly, the shares are far out for my expectations. And I'm inclined to let these run. And the moment it starts topping out, to take profits, frankly.
Okay. Our next one is Sol Gold, which we were initially positive on. Then we've turned negative. Mm-hmm. And they have, in fact, done reasonably well since our share talk. And the latest update was the 8th of April, where they said that the Alpala project, which you remember is their main project, project team, a project committee chaired by the new interim CEO, Keith Marshall, making good progress studying potential Alpala mine plans while addressing a number of mine development and metallurgical enhancements, as well as potential upsides, and are continuing to target the release of the preliminary feasibility study in late 2021. The revised mine plan being studied underpins the whole of the Alpala project, and the plan is of smaller initial scale and much more selective and simpler approach to mining the deposit. Now, one of our concerns about the project, which is why we changed our position slightly, was because, in fact, the proposed mechanism of mining was very complex and required removing a huge amount of material, and it was in an area that SolGold appeared to have no expertise. It would rather seem as if they may be addressing this shortcoming. And I think it's possibly maybe moving from the negative viewpoint, certainly for me, to the more positive viewpoint, if they can get their preliminary feasibility study out, basically, which they've been trying to do, I think, for the last 18 months now.
Yeah.
Keith, anything to add?
Yeah, sorry, Richard, I remain negative. The bottom line is, I think that it is now post-exploration largely, and it now has the long, hard slog of getting these mines into development. And the bottom line is it's worth, what, $500 million? Yeah? Yeah. $500 million, and it's, what, 5 years from having a working mine? No, sorry.
That's fair comment. Sylvania Platinum. So they've done quite nicely since we did our share talk on them. So they produced half-year results on 22nd of February. Net profit rose 70% to 40.5 million. EBITDA 58% to 58 million. And half-on revenue rose 44% to 85.2 million. Interesting that revenue rises 44%, EBITDA 58%, and net profit 70%. So clearly some operational gearing there. And I was just looking at the Platinum Group metals prices now, and platinum's up very slightly today. Palladium is up 0.5%, and rhodium is up 3%. And clearly, they are a leverage play on these rare platinum group metals, and those metal prices are continuing to go up as we report every week. So we are both positive on Sylvania Platinum.
Yep, not much to add to anything you have said, Richard. I mean, I think as long as platinum and in particular rhodium prices remain high, then Sylvania Platinum is dirt cheap, and so just stick with it.
Petrometad up 67% since the 16th of March. He's doing a fist pump. The significant news there is 12th of April, still awaiting Mongolian regulators' MRPC meeting. I can't remember what MRPC stands for, but it's the licensing mining regulator, the oil extraction regulator. And Petrovis has agreed to make available to Petrometad a line of credit of up to $1.5 million to be drawn when needed to maintain the company's operating capability to see it through to the award of the exploitation license and establishment of funding for development operations. Now, if you recall, Petrometad has this potentially very significant oil field. The executives are paying themselves hardly anything, and they are desperately awaiting regulatory approval so that they can get on and presumably raise a bit of money. So they seem to be making slow progress. But what is good news, I think, is that they've got additional funding from somebody who's clearly confident that they're going to be able to repay that debt.
Yeah, I mean, the thing is that the Petrovis have given them $1.5 million. I mean, that really does say quite a lot about the current state of this company, in that is fantastic news. You know, it's basically the Petrometad is essentially in a state of suspension until they get the exploitation license. And, you know, they've guided that they're getting closer, and they've spoken to the Mongolian government, and there are no obstacles, but they still haven't got it. You know, the bottom line is they're guiding, they're going to get it by the 31st of March. It is now the 27th of April. How long is this going to take? And the fact the shares have shot up, which is great, but they still haven't got the license. And, you know, you could look at it positively. When they get the license, I think there's plenty more upside, but they still haven't got the license.
Isn't that
getting a bit worrying?
So Drax, a trading update on the 21st of April. Now, neither Keys nor I like Drax, partly because we consider that it basically lives off energy subsidies, and it isn't as green as it claims to be. And anyway, the trading update: robust trading and operational performance during the first 3 months of 2021, completion of the acquisition of Pinnacle Renewable Energy, strong balance sheet and cash flows, continue to expect net debt to adjusted EBITDA of around 2 times, continued focus on clean energy generation. I presume they're referring to biomass, which we really didn't appreciate. Produced it, basically, accurately, in my view. Commercial coal generation ended in March this year, full closure in September 2022. Sale of existing gas generation assets in January. Sustainable growth in dividend, final dividend 10.3 pence per share. Total dividend 17 pence per share. So humming along nicely, but we don't like it.
Well, basically, it's humming along nicely as long as the UK government continues to do subsidies for, you know, chopping down forests in the US, pelletizing them and sending them across the Atlantic. It just seems absurd to me. And before too long, I think that will change. The subsidy regime will change, and Drax will disappear in a puff of smoke.
Puff of green smoke.
Yeah.
Emerson, there was no news announcements, so nothing to add to that one. Entech upstream. So Entech's trading results for the year ended 31st of March 2021 are expected to be in line with the board's expectation, with revenues in the region of 5 million and a break-even adjusted EBITDA. No other news than that. So I guess that is sort of steady as she goes.
No, there was a really good news on Entech, actually, but non-financial. So they have finalized the Shell rotatable steering system, which they've now rebranded as Sabre, which sounds much
Oh, I
nicer.
remember you talking about this. Yeah, sorry about that. Sorry to miss that.
And that is now going into testing, and they are aiming to have it in for sale and in production by the end of the year. And that will hopefully completely transform the business, you know. And I remain very positive about this company, which is minute, but I have a decently sized position, frankly, and I remain bullish.
Great. Well, thank you for adding that in, Keith. I didn't pick that up on the RNS, so maybe it was just a news item, not an RNS item, but maybe I just missed it. Hunting, trading Q1, this was announced on 21st of April, trading Q1 21, broadly in line with expectations, small EBITDA loss being recorded, predominantly driven by subdued offshore drilling activity throughout half one of 2020 and into 2021. Activity at the group's facilities in Texas was also impacted for a week in February due to the severe weather conditions across the state. Nothing much has changed, I think, really.
No, I mean, so before you go on, Richard, I mean, I have a big position in Hunting, and I really like the company. The thing is, all the oil companies got very badly hit over the past 3 months as oil has kind of gone nowhere, and all the oil companies have gone down. Now, I just remain very positive on Hunting. I think as the oil price remains high, the shale oil drillers are steadily increasing the rig count, which is great for Hunting. And as the oil price rises, international exploration has to increase. So, you know, I'll buy some more, frankly.
Right. Colonial Coal, no news at all. And still presumably trying to develop the metallurgical coal mine in British Columbia in Canada. The price of iron ore, as we know, has gone up very significantly, which suggests there has been significant demand, which suggests there's a lot of demand for metallurgical coal. So presumably things are just moving quietly along there as they develop it into a saleable project. And I do own Colonial Coal. TechBar has produced multiple updates, but mostly showing that Schroders is slowly selling its holding down.
Yes.
And currently has about 17%. I suspect that, personally, I suspect this isn't of any great significance. I suspect they probably feel they have too many shares and they just want to offload a few. But obviously they don't say that in their statements. That's conjecture on my part.
Well, I remain very positive on TechBar. As you'll know, people who follow the weekly will know I substantially added to my position a couple of weeks ago when I did an updated presentation on TechBar. They're winning contracts. You know, I think the shares are towards their lows of the COVID era. Everything else in the market's recovered. And we did a competitor analysis. They seem to have a strong competitive advantage, or not advantage, but position. So I just don't see why the shares are so bombed out. Obviously, Schroders are steadily selling down a 17% stake, which doesn't help.
I think probably once Schroders finish selling their 17, whatever proportion of their stake they wish to sell, that's when the share price will begin to kick up. Because like you, Keith, I think it has excellent prospects in this wind generation sector. Well, Lynas Corporation got hit quite recently, actually. Its share price dropped significantly. And they produced a couple of announcements. On the 19th of April, they said they had a 20% rise in quarterly revenues, helped by a rise in demand and prices for neodymium and praseodymium. And they posted revenue of 110 Australian dollars for the 3 months to the end of March, up from $91 million, so over 20% increase a year earlier. And then on 20th of April, they said that quarter three sales fell about 8%, and volume of rare earth oxide slipped 23% from quarter two, partly due to the Suez Canal blockage in March, but also faced with difficulties to secure shipments, as fewer ships were available due to the pandemic. So if this is an accurate representation of why their volumes have dropped, then it's clearly temporary, and we are very confident in the future of rare earth metals. in terms of battery and green technology. I own Lioness Corporation, and I am continuing to hold my position.
Well, I would say, Richard, we were very positive about rare earths in the short term, but worried that there's a wall of supply coming into a market which is strong price demand inelastic. But actually your description of the update sounds interesting, in that if their production is being constrained by shipping, then hopefully that will clear. But you will have seen the Baltic Dry Index hit a new high this week, and so
absolutely, huge.
Yeah, although shipping problems aren't going away.
Yeah, exactly. I think that's right. And that's an issue for inflation as well, which we can perhaps talk about in our weekly. So the next page, Keith. So Hochschild Mining, they produced their 2020 annual report and accounts on the 22nd of April, which I haven't read, but I assume they have done okay. They're a gold mining company. The price of gold is slowly trickling upwards. And I don't know if you have anything to add, Keith. I know you own them.
Well, sadly, I do. I mean, I own Hochschild. It's mainly silver, actually, gold and silver. And in fact, the annual reports were quite disappointing. As people who watched our share talk will remember, that production was very heavily hit by COVID-19. And from memory, their guidance for this year was disappointing. You'd expect them to be completely recovered from COVID disruption, and they weren't. They weren't guiding to that. But the shares have drifted off with gold and silver. I have no intention of selling it.
Okay. So Diversified Gas and Oil, who rejuvenate old oil wells and gas wells, produced their results on the 1st of April. Their annual results so their December exit rate production was 103,000 barrels of oil equivalent per day, 8% higher than the 2019 figure. Exceptionally low corporate annual decline rate of around about 7%, which is actually, I think, quite a lot less than one would expect from these unconventional wells. They had a hedged adjusted EBITDA of 301 million, up 10% from 2019. Of course, they do a lot of hedging. Adjusted net income of $175 million represents an 83% increase over the prior year, which was 96 million. And excluding mark-to-market of their hedging. Their total revenue, excluding hedging, was 409 versus 462 million, due to lower commodity prices in 2020, partially offset by higher production. The cash margin of 54%, driven by a 10% reduction in total cash expenses, which is a magnificent cash margin, I would say. Yeah. Dividend increased by 14%, with 2 consecutive quarterly raises during 2020, recommended a final quarterly dividend of 4 cents per share, bringing it to a total of 15 cents per share, 10% higher than in 2019. A record full-year average daily net production of 100,000 barrels of oil equivalent per day, 18% up. So all good news, I would think, Keith.
Yeah, I mean, basically, I'll tuck it away. Very good yield. I've absolutely failed to see why the market didn't appreciate the results, really.
But the dividend going up at 10 to 14% per annum, something like that.
Yeah.
The law of exponential appreciation will start to kick in at some point, presumably, hopefully.
Yeah,
Keith and I both own this company.
Yeah, and I'm tucking away the dividends very happily, thank you very much, and got no concerns whatsoever.
Great. Harbour Energy, unchanged, but we only did it on the 16th of April, so that's not terribly surprising. And no announcements since the 16th of April, so nothing to add there. And Metal Tiger, slightly down. Remember, this was one of these royalty companies. And on the 19th of April, the major drilling program at Kalahari Metals Limited was approved by the joint venture board.
Yeah. Costs are too high. Full stop. That's it. All you need to know.
Trident Royalties they had, so on the 22nd of April, they issued a JORC compliant mineral resource estimate update, providing a 50% increase in indicated mineral resources to 815 ounces of gold.
So which asset was that, Richard? Do you know?
I'm just looking now. Apollo?
Right.
Yeah. So anyway, that's. I don't think we were particularly favourable on Trident Royalties, were we, Keith?
Well, the trouble is, Rich, it's just very early stage. You know, they're trying to set up a mining royalty company, but as you went through all the royalties they'd signed, they were just, frankly, they were quite very disappointing in their size, and it made me realise that, you know, we were anchoring on 15 years ago when this space was probably not very well filled, and the big Nevada, etc., the big majors, mining royalty companies had the space themselves. Now private equity are in, everyone's in, and I think the deals are just much less lucrative.
So in reality, what Trident Royalties needs to do is produce a stream of good news like that, and gradually their share price their value might start to inch up incrementally.
Yeah.
Petrofac, who we looked at in late February.
Yes.
They had on 20th April they produced their results for the year ended 31st December 2020. They protected their margins and conserved cash in challenging market conditions, achieved cost savings of 140 million ahead of target, a net profit of $48 million, but reported a net loss of $180 million post-impairment. And I guess you really need to take the post-impairment loss, don't you? New order intake of 1.6 billion and a 22% of rewards in new energy. So a net debt of 116 million, liquidity of 1.1 billion. So very cash-rich company, wasn't it, Keith? Still is. This is the one that had all the difficulties with malfeasance, wasn't it?
It was, yes. And frankly, that is the big thing about the latest report was, if you remember, when we did our share talk on Petrofac, we highlighted loads and loads of red flags. Is probably the company with the most risks we've covered. And subsequent to our share talk, the Abu Dhabi National Oil Company banned it from bidding, which was in addition to, I think, Saudi Arabia and Oman. So, I mean, who's left? Sorry, no, Saudi Arabia and Iraq, sorry. So who's left? I mean, unless they come to a deal with the SFO, then their business is just slowly disappearing as they get banned from more and more jurisdictions. And I was hoping that annual report would contain a statement saying they'd come to an agreement with the SFO because they've got a new CEO, and you'd hope that he was going to be a clean broom. But no such statement was forthcoming. The shares ticked up, and I sold the lot at the price at which I got out.
Okay, interesting. So Anglo Pacific, so they produced their full-year results on the 14th of April. Their operating profit was £22 million as opposed to 44.8 in 2019. Their loss after tax included valuation and impairment charges of 18 million and reflects a 44.2 million valuation charge against Kestrel and impairments of 3.4 million. Basic loss per share 10.3 pence, and against earnings in 2019 of 16. So obviously a lot of write-offs were made there, and their operating profit also halved. Now, that doesn't strike me as being very positive.
No, Richard, that's all part of the course. If you remember, most of their earnings come from Kestrel, and their net smelter royalty, or sorry, their gross revenue royalty with Kestrel is geared. So if the coal price falls below a certain point, they get less per ton. And so, last year was just a bit of a disaster. The production was down and the price was lower. This year, I think the market is really underestimating how much money they're going to make, because the Kestrel operators are going to start mining the area where Anglo Pacific have their main royalties. And in the next couple of years, that will be the 2 years where Anglo Pacific makes most of their money out of Kestrel. And so the coal price has recovered. I think it's going to kick off a lot of cash. But most importantly, now it has signed this cobalt stream in Canada, and that's not coming on yet, but that's transformative in 4 or 5 years' time.
Okay, so you're confidently holding, Keith.
Yep.
Centamin, 22nd of April, produced Q1 report. Gold production from the Sukari mine for the first quarter was 104 ounces, in line with guidance. Record quarterly total material removed, 22 million tons. Revenue was $190 million from gold sales, and an average price of $1,778. Cash cost of $733 an ounce, all-in sustaining cost of $1,090. Group free cash flow of $99 million after $37 million of capital expenditure, and $27 million distributed to the Egyptian government in profit share payment and royalties, which is a big chunk. Strong balance sheet, no debt, no hedging, cash and liquid assets of £331 million, and they say their outlook is unchanged.
Yeah, the thing is just the gold price, and the gold price is, going nowhere. And frankly, I would be wary of buying Centamin before. I'd wait to see how the gold price reacts to rising interest rates, because I think interest rates have to rise with inflation before I touch Centamin again.
And of course, they also have to remove that very large quantity of material, don't they, around their open pit mine?
Yeah.
Ferro Alloy Resources, following the entry of Sir Mick Davis as a major shareholder in late March, which obviously was very significant and caused the share price to go up very dramatically, there has been no further significant news.
Yeah. Well, it's drifted back off. The thing is, when we say the price at the close of the publication of our presentation on it, the thing is, when we started working on the presentation, it was at 10p, and then it absolutely shot up in the 2 weeks it took us to do it. So, the thing is,
we don't claim anything that we that isn't open and honest, Keith. Here we do it, so we're absolutely honest. On the day we did the publication, it was 43p.
Yeah, that's right. But the thing is, medium term, if they get this project off the ground, it's worth a lot of money.
It has an NPV of about $2 billion, doesn't it? So it's a fraction of the share price. The company's capitalization is a small fraction of that.
Yeah. So what is happening here, Richard, is that the share price shot up from 10p to 50p in a matter of days. And then all the momentum, short term, like day traders got involved, and there's been no news. They're getting bored. They're losing money. They're selling out. So
just hold on. I was looking at it this morning. It's just a little bit below the 30% Fibonacci retracement.
Yeah. So
it hasn't even achieved a 50% retracement. So there's nothing abnormal in what the share price is doing in terms of retracing some of that gain.
If it goes down below 30p, I'll buy more, actually. Anyway.
Ely Gold Royalties has multiple updates, but the most significant one I thought was it issued a private placement. It produced a new corporate presentation in March 2021, in which it talked about a private placement which was oversubscribed of $17.2 million, and it added 5 new institutional shareholders, and it considers that it's doubled the size of its key asset portfolio. So it appears to be growing nicely and very comfortable with the additional properties that it has added to its portfolio. Goldplat. So Goldplat has, on 26th of April, yesterday, they announced completion of the sale of the Kilimapesa gold property. and they sold it via a secured debenture for $1.5 million to be satisfied by cash and or the issue of shares to that value in Papillon, payable on Papillon's readmission to trading on the LSE following completion of the RTO, with 30% of the initial consideration paid in cash. In other words, they haven't actually got the money, but they have got a debenture. In the event that Papillon is not readmitted to trading by 16th of July, the full consideration of $1.5 million becomes payable in cash and will attract interest of 4%.
Yeah, like the thing is, Richard, they also did their I think an annual report or at least an update, and frankly, I thought it was all great. I mean, when we did our presentation, our concerns were Kilimapasa, which they've sold and which they were steadily losing money on, and they're going to get actually cash for it. Great. But that was a liability that they've now essentially offloaded for cash. But the big thing was Ghana, and were they going to get enough feedstock in Ghana to maintain production and profitable production? And the answer was yes. So to me, the shares are dirt cheap. I mean, it's drifted off with the gold price, but I think it's a fundamentally undervalued company.
They did have a little spurt the other day, I noticed. They were up about 10%, possibly brought about by the news of the completion or the imminent completion of the sale. Bushveld Minerals, so they announced on the 19th of April industrial action at the Vametco operation, which has temporarily stopped production with effect from the morning of the 16th of April. They haven't announced the cessation of industrial action, so I presume it's still ongoing. And on the 27th of April, they announced that they'd acquired an indirect interest of 11.505% in Enerox GmbH, which is a vanadium redox flow battery manufacturer providing grid-scale and microgrid energy storage solutions. And they announced the completion of the investment by VRFBH, which is actually Enerox, into the 100% holding company for Enerox Holdings Limited. So a little bit of complicated, I think, share structure there. But consortium investors in Enerox are investing 30 million to scale up the VRFB production capacity to 30 megawatts by 2022. And Bushveld now holds an indirect interest of 25% in Enerox. So they are continuing to develop their VRFB battery technologies, but the issue that we find with them is that ferroalloy resources can potentially produce a very large quantity of vanadium at a much lower price.
That's true, but I mean, and the thing is, Richard, the ferroalloy, development is actually, despite owning loads of it, it's still far from certain it's going to happen. And actually, if Bushveld ramp up to their nameplate guidance, then the shares could still do well. However, I mean, I sold my shares because of, frankly, all the nutty grief we got over our presentation.
Yes.
The low point of our podcasting was when I was accused of being some short-selling evil mastermind for our relatively measured comments about Bushveld.
Yeah. And when you said, actually, I hold these shares, the response was, yes, probably one share, you deramper or something. I mean, it was extraordinary, wasn't it? I did own Bushveld. I made some profit on them, and I too have sold them. No, and I think the industrial action is bad news for them, obviously, and hopefully they'll get it resolved shortly.
Yeah, the other thing I'd say is that if I was so Bushveld has been drifting off, the other concern we had about it was just that market cap was very high. Even if it developed all its plans, you're looking at probably a twofold increase in the share price, and there are lots of uncertainties involved, and we wondered whether that really was enough. And I thought the RNS announcement about the Enerox investment was actually very positive, given the valuation that the new investors were putting on the business compared to the amount of investment that Bushveld had originally put in. And you could see that Bushveld actually has made a very good return on that investment. But the Bushveld shares actually were down.
It does seem that VRFB battery technology is starting to make more headway, and I suspect it will continue to do so as an alternative to storage mechanism for lithium batteries. Yeah, I mean we will see, won't we? I think that's the
well, Richard, my point was that on positive news, the shares fell slightly, but that's bad. That's not a good pattern.
No, and I think the industrial action is poor because it indicates that they have poor industrial relations, and that is an issue that could dog the company for some time to come, potentially. Alta Strategies I have no comments on.
Okay, our concern was we like the company, but early stage assets essentially, and the share price had pentupled in 6 months or something, and we were concerned the shares were overvalued, and I think those concerns have been proved right essentially.
So on to Zinwall Lithium, which I own. There's been no news basically since we did the share talk on Zinwall, and they're obviously continuing to develop the mine there. There's currently no mining activity, so I continue to be positive on the largest potential lithium producer in Europe, and there's nothing else to add there unless you have anything to say, Keith.
Not really, no.
Anglo Asian Mining, 15th of April, produced their full-year production guidance for 2021 of 64,000, 72,000 ounces of gold equivalent. Gold production for Q1 was 11,900 ounces. Copper production increased by 14%, 638 tons. Silver production for Q1 21 totaled 35,000 ounces. Forecast copper production for full year 21 of 2.5 to 2,800 tons of copper, and forecast total metal production for full year 2021 of 64,000 to 72,000 tons. So Q1 2021 gold bullion sales of 5,600 ounces, an average of 16.97 per ounce. So production going well. And
sorry, Richard. Actually, can I come in? Now, I was disappointed with the RNS because when I did my presentation, I had failed to spot that the Uga mine was going to be depleted.
Yes.
And so it is now depleted, and so guidance going forward is substantially down. But the reason we liked Anglo Asian is because of all the assets they'd got after the ceasefire between Armenia and Azerbaijan. And frankly, I just think there's a great catalyst here the moment they can get hold of those assets and start exploring them. And that's,
they're also planning to continue the exploration around the Uga mine, aren't they? Because
there
are more deposits there. So whilst it's currently depleted, I don't think it's necessarily permanently depleted, but they need to do some exploration to find out where they need to reactivate their mining.
Yeah, absolutely. So I mean, I have the shares and I've got no concerns about it. You bought it because there's exploration upside.
Great. Vasarian, our last one. The only news I could find since we did the share talk was there's been a 1.9 million strategic investment in Vasarian by Graphene Lab. I think our issue was that they were pretty highly capitalized, pretty high market capitalization for a business that had relatively low turnover.
In retrospect, Richard, it's a company that, I mean, I covered it and I probably shouldn't have bothered. Essentially, it is a piece of speculative nonsense, I think was our summary. The thing is, graphene, it has been around for a very long time now, actually. Vasarian's been around in the market for a decade. It's never sold any. I mean, when you look into, the amounts it's selling, they're tiny.
Yeah.
And it basically exists by producing a constant flow of collaborations. We're investigating graphene in X, Y, and Z, but they never come to anything. And so we were negative, got a bit of grief about it for it, and we've been dead right.
Indeed. So that about wraps up our update for this quarter. We'll do one in 3 months' time, I would think, Keith.
Absolutely. Well, thanks for all your hard work looking through all the RNSs, Richard.
That's a pleasure, Keith, and thank you for your very informative comments that you chipped in with throughout. Really interesting.
Now, we have actually managed to forget to do capital drilling, but we'll catch up on that one next time. I liked the results on capital drilling, and, it's growing, it's cheap. I'll probably do an updated presentation on it at some stage. It was one of our very first ones, and I noticed that almost nobody's watched it. So, anyway.
Go and have a look.
Yeah. Okay, so thank you, Richard, for all your hard work, and thank you all for watching. I hope you will watch all our share talks as they come out, and press subscribe and like, please. And in the meantime, it is goodbye from Richard Wheater.
And it's goodbye from Keith Jordan.
Goodbye.
Full disclaimer. The material and information contained in this podcast is for information and entertainment purposes only, and should not be relied upon for making a business, legal, or any other decision. We may own or have a financial interest in any securities mentioned. Listeners should conduct their own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. Whilst we endeavour to ensure that the information presented on the show is correct, we make no representations or warranties of any kind, express or implied, with respect to the podcast and website, or to any information, products, services, or related graphics discussed or presented in the podcast or website. Any reliance you place on such material is strictly at your own risk. You are solely responsible for the investment decisions you make. We will not be responsible for any errors or omissions in the podcast or website, including in articles or postings, for hyperlinks embedded in messages, or for any results obtained from the use of such information. Nor will we be liable for any loss or damage, including consequential damages, if any, caused by a reader's reliance on any information provided by the podcast or website. Please do not listen to the podcast if you do not accept self-responsibility for your actions.